And look who's here. He's made the trip all the way up here to sit next to us for the entire hour here in New York. His name is Ghabour, and he's been right about the market so far. Eddie, welcome back to the show.
Thank you. It's great to be here.
Last time you were here, you said that, look, if the Fed gets aggressive on interest rates, this market could fall another 10 or 20% from where it is now, and it's already way down. You sticking with that?
Absolutely. Look, they are playing with fire right here. This economy is extremely fragile. And my belief right now is if they did nothing, we're starting to see disinflation happening now. The consumer is running out of money. The debt that they're starting to accumulate on credit card debt right now because of the cost of living is starting to continue to inflate. If they come in with this hammer and tighten the policy, tighten the interest rates as fast as they plan to do it, I believe there's going to be a huge shock to the economy. It's not going to be a slowdown. It's going to be a stop. And that's when you have markets crash from these oversold conditions that we are in right now.
You use the word crash. That's a very emotive word. You're going to stick with crash?
Yeah, look, crash is over 20+%, all right? The NASDAQ is already there. The S&P, in my opinion, is going to be at least 30% down. And the reason why is I think we are going into a recession. And you look back at bear markets, when we're in a recession, you should expect at least a 30+% drop in the broader market. And the problem is I believe we're coming from one of the biggest bubbles we have seen in our lifetime. And there's a lot of leverage out there, too, Stuart, that people don't realize.
Supposing the Fed did not act aggressively, I mean, they're under great pressure not to be so tight with the money. I mean, suppose they reacted differently.
It would be a softer landing. It would still be difficult to deal with, but not nearly as difficult as what they're doing. I'm shocked they're coming in as aggressive as they are. I think it's just as big a mistake as they're doing now as it was when they said inflation was transitory last year.
So do you think I should sell my Microsoft? It's all the way down. I mean, I've lost a third of my money in Microsoft. Are you telling me sell it and get out while I can?
So, Stuart, I told you months ago you should just become a client of ours, and we would have reallocated you in a way. Look, I think right now...
So what should I sell?
I think you should have some cash. I don't know how much you have in Microsoft or what your overall portfolio is.
A lot.
Oh, gosh. All right.
Yeah.
So you've probably also made a lot. All right. So I think where people are right now is they're seeing their stocks and they say, wow, it's down 30%. How much lower can it go?
Yeah.
A lot lower. Look at the chart over the last several years.
Okay, well, look, you're going to stick around for the entire hour. I always say people who do that are a glutton for punishment, so stick around, lad.
All right.
We'll get to you a bit more later.